All right, let's get this set up. Make sure I got audio. Let's see. Send out some invites here. What is up, Curtis? All right, just getting going, get some people on the stream here. Let a couple people join up. Let's see. Invite friends. How is everybody doing? Curtis, can you hear me? How's my audio? Hey, Vanessa, how you doing? Got a couple people. All right, good. Thumbs up. Perfect, perfect. How are you doing today, Vanessa? Hey, Chuck. All right, this is the first time I've ever done a live stream with trying this picture-in-picture thing here. So hopefully it won't get too distracting with all the numbers here. So should be able to still pull up all the reports. Hey, Chuck, how you doing? Hey, Simon. All right, we'll get started here, guys, in a little bit. About a couple minutes left until 7 o'clock, and then we'll get going. Awesome, looks pretty cool. I know it's got a little bit of a lag, but as long as the audio is good, that's all I care about. All right, so I don't know how long this is going to take, but basically what we're going to be doing today is a QuickBooks is what I use, but kind of a training on all the finances that go along with being a real estate agent and growing a real estate business. So, all right, almost 7 o'clock here. How you doing today, Chuck? Hey, what's up, Will? Oh, thanks, Simon. Appreciate that. All right. So who on here? Give me a thumbs up if you're already tracking your finances. Actually, you know what? Give me a thumbs up if you're not tracking your finances. If you have no program or system at all to track your numbers. I just want to get an idea of who's on the call that isn't using anything like that. What's up, Ian? My man. Joey, how's it going? You made it. What's up, Clint? We got a thumbs up, all right. Who else? Norma, what's going on, Norma? Good to see you. All right, perfect. 7:01. So we're got a lot of people now trickling in. All right. What up, Ian? Good to see you, man. Hope to see you soon. New Orleans. Joey, hey, hey. We got to get together, brother. I'm telling you, soon. It'll happen. Promise. Amber, what's up, Amber? Good to see you on here. Hey, Norma. All right. Very cool. Let me give a couple people a few more minutes to trickle in. All right, I got a few more thumbs up. Let's see. So got a few people that they don't have any systems yet for tracking their P&Ls, their profit and loss for their real estate business. So again, that's what we're going to be doing tonight, guys, is going over a training, kind of how I keep my books. And again, I'm not, the master by any means. I'm sure there's probably even better, ways to do it. But I've been tracking my finances for a couple of years now. So I've learned a few things, and hopefully I can at least share what I've learned. And, and you guys will maybe pick up a thing or two from it. And again, I don't know if there's, I'm sure there's other methods that you can do to, track your finances. I use QuickBooks, but again, I mean, whatever you use, if it's, an Excel spreadsheet, that's fine too. But one thing I will say about tracking your finances is you gotta do it one way or the other. It's the only way to build a predictable, sustainable business, one where you're, basically growing, and you're not just, kind of, at the mercy of what the market gives you. You really got to be in tune with your expenses, with your income, return on investment, making sure that you're making wise decisions for your business. So that's what this is going to be about. Just getting done with showings. Nice. Late night for you. All right. So we probably got a little bit of a delay. I'd imagine a little, probably about 5 seconds, 10 seconds, it looks like. So no biggie though. All right, we got a couple more people. Thumbs up. All right. Perfect. All right, well, guys, we're going to go ahead. We'll get rocking and rolling here then, and we'll start this training right now. And I don't know. I think the best way to probably do it is to keep some notes, because I'm going to be going over quite a bit of stuff. I'm going to first start out by just kind of going through my settings and showing you kind of what settings that I have set up for QuickBooks. And obviously, if you're using a different program, those settings might not apply. But at least you can also see like why I have things set up a certain way, and also why I use QuickBooks. There's a lot of features and functionality that QuickBooks gives me that it's worth the money that I spend. I'll kind of tell you how much it costs me on a monthly basis. And all right, just making sure the video's still going. What's up, Mike? And so we'll go from there. So again, real quick, just an overview on, tracking your finances, tracking, what you're spending and what you're bringing in. I mean, at the bare minimum, that's, really what this is all about. So any system that you might have where you're kind of doing that consistently, and that's the important thing, is consistency. I track my P&L at least monthly, if not, more than that. Sometimes I go in here, 2 weeks in, and I just kind of check and see how things are going for the month. But the other important part about, not just tracking the numbers is actually setting your goal. Once you know how to do this, you can actually set a goal for what it is that you want to accomplish for the quarter, for the year, 6 months through, whatever it is. So you have that plan, and you can kind of see how close to that plan you're sticking. And for me, and I'm probably like most real estate agents watching this, we all have that syndrome where we get the shiny object syndrome, and we all find these tools or systems that, catch our attention, and we want to, just, basically derail our business plan and go try something or do something different. And I was just as guilty of that as probably anybody on this call, if not more. And it wasn't until I really started keeping track of my numbers, my finances, that I could set a goal up front and for what I wanted to do, and then really stay focused. I mean, because anything that would derail my profit and loss was a pretty easy decision on if I should do it or not do it. and or if I should investigate further and maybe, you know, make that part of my business plan the next quarter or the next 6 months or the next year or whatever. But it'll help guide me as to how I should be, you know, running my business that year. And so lots of good reasons for why you should definitely be tracking P&L. But that being said, I'm sure I'll probably touch on more aspects of it as I go through this. But I just want to jump in and kind of get going with this with you guys. So first off, again, so I'm using QuickBooks. I'm going to come up here and show you kind of my settings, and I'll start there just so you can see it. And I do plan for this to be recorded. So of course, if you know, you got to run, or if you know, I go over something too quickly, you know, you can obviously come back on here later and see it. But one of the things that, you know, I want you to see, of course, is, you know, obviously I got my business information in here. You can put in here what type of you know, corporation you are, you know, if you're, you know, LLC, if you're, you know, just doing business by yourself, if you're, you know, 1120S, your accountant should tell you all this kind of stuff if you have an accountant. And again, if you're not even set up as an LLC, it's still, you know, very important. You can still use this system. But you just don't need to put in what type of tax form that you're doing. So you just basically, that's your basic information in here. Billing and subscription. So I use the QuickBooks Plus plan, and let me kind of show you why I do that. So first off, let me go to cancel here, change my plan. Later, Curtis. What's up, Brayson? I will see you tomorrow, man. Looking forward to it. All right, so you can see here, it's like this is kind of in the way there. I'll move that down. So here's the different plans that QuickBooks offers. I'm on the Plus plan, costs $60 a month. You can start with 15 a month, 30 for Essentials, 60 for the Plus. And honestly, I mean, I do the Plus because I have to do 1099s. You know, when I'm running a team, I've got agents that are closing deals. I'm, you know, paying them out of, you know, the business account. And so they, you know, get 1099 at the end of the year. So I have the Plus account to basically help me prepare those 1099s. If you don't have any contractors that you're 1099ing, this is just your income, you know, nothing like that, no employees that you're going to need to do payroll with, and no contractors that you're paying outside, then you might not need to do the Plus subscription. I don't have inventory, so that's not really important. So I just use it for the 1099s. And I think, yeah, so I think actually you might not even need the Essentials plan. You probably can go all the way to the Simple Start and just kind of get started there. So for $15 a month, you could get started, you know, with QuickBooks. There is one feature, and I'm not sure if it's available in the Simple Start. It might be the Essentials. It doesn't show it here, but it's the ability to track your finances by classes. And so what classes basically does is if you have, say, multiple streams of income that you're bringing in, and you just want to use one QuickBooks account, you can class them differently, and I'll kind of show you how I do that here in a little bit. But I think that's why I had to go to the Essentials platform here, and then I ended up going to the Plus just for the 1099s. But I'll kind of tell you what the classes are about, so just realize that that might be the differentiator there. And I think it's going to be coming up here in a little bit, so I'll kind of go that. Sales, again, I don't think I changed anything with this. Again, I don't really track my sales through the way that QuickBooks uses it. I think that's more of like you're selling items and things like that, so I just kind of leave that blank. Expenses, same thing here. I don't, you know, really use the bills and expenses as well, so I just left that the same. Payments and advanced. So the one part here, so this is where, again, you will have to probably change a couple of these things. I'm on a cash accounting method. I think there's cash and accrual, something like that. Talked to my accountant, he said use cash, so that's what I use. First month of the year, same as the fiscal year, January. This is the important one here, track classes. You want that to be on if you're going to be using classes, and I'll kind of show you what classes is. Gonna go down here, of course, US dollar. You can kind of see, I think all this stuff is just standard. So the rest of that is all pretty much just standard stuff. So for the advanced, so that's kind of what I have mine set up to look like. Right, so now let me go back Manage users, that's just if you're going to have other people coming into your QuickBooks to help manage it for you. So like if you have a bookkeeper or your accountant or something like that that you want to give access to, you can see in here, that's where you give access. I've got my accountant. I use Brian Mason, great accountant here in San Antonio. If you're watching this in San Antonio, he's a good accountant. But I give him access so he can pull this up and take a look at it when I need. Let's see, chart of accounts. So we'll go in there. So this is going to be one of the first ones that you definitely want to kind of take note, or at least just be able to watch this back and see how I have my chart of accounts set up. And so there's one thing that I got to fix. I got to get my accountant to look at it. But this Handy Realty checking, I actually have two different checking accounts in here. RBFCU is my Handy Realty checking, and this shouldn't be actually used. It should be at $0. But when I had some taxes taken out, it took it from this account versus this one for whatever reason. Now I can't change it back. But either way, what you're going to have in here basically is set up all of your accounts. So you're going to put your bank account in here, your business bank account. And again, this is, actually I should take a step back and just let you know, if you don't already have separate bank accounts for your business and for your personal bank account, that's the first thing you need to set up. Go get yourself, even if it's not necessarily a business account. I mean, I don't know why you wouldn't want to do a business account, but even if it's not, just have two different accounts. You need to make sure that your expenses are coming out of that separate account than your personal, and your income is going into that separate account than your personal. It will just make all of your tracking a million times easier. I don't even know how you would do it if you have them going into the same account. So the first thing you need to do is create two separate checking accounts. I use checking accounts. But have your personal, have a business, and then hook your business checking account up to QuickBooks or whatever it is that you're going to be using. Again, I recommend QuickBooks, but hook that up so you can see here I got RBFCU checking. Accounts receivable, that automatically gets created with QuickBooks. You can't delete it. I don't use it. Uncategorized assets, same thing. Can't change it. It's just there. Undeposited funds, same thing, just there. Can't really change that. Petty cash, that's just like cash that I've got in my wallet or at my house or something like that I've taken from the business that I've sitting around. You can see there's not much in there. Most everything is through my bank account or through my credit card that I use for the business. And let's see, furniture and fixtures. So again, this is something that if you have assets that you're buying, I don't know the number exactly. You want to definitely talk to an accountant, but I think if it's over $500 of something, like if you're buying like a laptop, if you're buying a digital camera, if you're buying a TV for your office or furniture or something like that you're going to use for business, you're going to actually classify that as an asset of your business. It's not necessarily an expense. So an expense is like a one-time thing. An asset is something you have, you own it. You can maybe sell it down the road if you got to liquidate. But it's anything basically over $500 is how it was explained to me. You put it into as a furniture and fixture is what I have the account set up as. And so you can see there, all my assets that I've bought for my business is that. Now, every year and again, if you have an accountant, because I don't even do this myself, he will allocate a certain amount of depreciation to those assets that I've purchased for the year. And so you can see here that by the end of this year, he'll take that amount and he'll, basically put in some depreciation. Same thing, I've got a vehicle that I have assigned to my LLC. So, put the price in there, the original cost, the depreciation, gets you what your current value is for that. I got stock, which is a long-term asset that's through my business. So I've got that in there, and that's the amount that you pay for it. It's not the amount that it's worth today. It's what you pay for it. You don't actually realize any gains or losses on stock until you sell it. So you just track what you purchased it for. Security deposits, I have this one in there because, of course, I had a lease, or actually I still have a lease for a office building, and they've got a security deposit of mine, which is an asset of mine, because when the lease is over, if I fulfill my terms of the lease and I return it back to them in great shape, then of course they owe me this money here. So I've tracked that. Accounts payable, again, I don't use that. I don't have a business set up that way where I have accounts receivables or accounts payables. So that's just 0. My credit card, which you'll see here, that's tracked as well. So I just use a Chase credit card, Chase business credit card. Payroll liabilities. So this is if you have payroll, if you've got employees that you're paying. QuickBooks sets all of these accounts up for you automatically. So it looks super confusing. But basically, if you set up for the payroll option, which it is an additional option on top of the QuickBooks expense, I think it's like $39 a month plus $2 for every user that you have. So, obviously I'm paying 60 bucks a month plus the 39 plus $2 for myself because I am an employee of my own company. So I'm paying about $100 for the whole QuickBooks setup. Yours might be completely different. If you can get by with just the $15 a month one, great. You might not be paying yourself as an employee. That's fine too. Again, you need to talk to your accountant to see what's right for you. I know that this just seems to be the right setup for me, is that I'm an LLC with an S corporation as my designation, and I'm an employee of that LLC. I pay myself a salary, and so we'll kind of get into that a little bit more here in a little bit. So here's the loan. So that's the liability that offsets the vehicle that I have above. Owner's draw. So this is a separate form of income that I pay to myself, depending on, of course, I told you guys that I've got a salary, but then anything I take out of the business in addition to that salary goes into owner's draw, and that gets accounted for at the end of the year through taxes. And that's it. And so that's all my accounts, right? So like my assets and my liabilities. Now we're going to get down here into my income and my expenses. So let me just give you a quick real kind of clarification between the differences. And it's been a while. So I was a finance major. I graduated in 2008, but I lost a lot of what I learned back then, as I'm sure most of you guys probably have from going to college. But so the way that I understand it, and I might totally botch this, but an asset and a liability is something that's kind of like ongoing. You own that asset for indefinitely. You have a liability indefinitely until you don't. And then same thing as like an equity. When we get down here into income and expenses, these are things that happen one time. They might be recurring, but you might get like an income for selling a house. And that's the difference. You're not getting an asset, like an asset, something you own, and it's going to stay in there. And income is like you earn that income, and then it's in that account. And that's kind of, and then same thing for expenses. They're like a one-time expense as well. So expense is different than a liability. Asset is different than an income. Hopefully that's not too confusing, but you can kind of see here how I have mine set up. Billable expense income. That's just what QuickBooks puts in there. I don't use that category, but then I do have Kyle Handy income. That's a category that I have. I've got leads income, and that's because I've got a different deal with some EXP stuff that I've got some income coming in from that. Level 2 income. So this is for any team leaders that are on the call kind of watching this. If you've got agents on a team of yours, you're going to have, I call it level 2 income, just to kind of separate it from, my income. But I've got level 2 income, and then as subcategories of that, I've got income categories for all of the agents that are on my team that are providing that level 2 income. I've got listing income. I don't use that category anymore. I used to track my listing income separate from my buyer's income, but now I just track one income, Kyle Handy income, and that's it. I do have a separate sheet, a separate Excel spreadsheet that I track all of my transactions, and I'm able to kind of determine which ones are listings, which ones are buyers. Mentor income, again, that's different. That's through EXP being a mentor to agents. I get mentor income from there. So you're just going to basically put all of your different incomes that you might earn in your QuickBooks. So I've got revenue share income, sales of product income. Again, that comes with QuickBooks. You can't delete it. I got Stacy Handy income. I have a separate. She was obviously one of my agents on my team, but of course I did not keep any of that, but it would come in and I would have to have it go out. And so I did track that. Sublease income. So now that I've subleased my office, I've got income coming in from there. Unapplied cash payment income, again, I don't use it. It's just in there. And uncategorized income is just for anything that doesn't fit any of the above. Try not to use the uncategorized or others or anything that's pretty vague. If it's something, pretty important, I try and categorize it and go from there. So those are the income categories. So next up is going to be cost of goods sold. And these are like an expense, but these are basically, the way I understand it is, these are applicable just to, they're directly related to your incomes that you're earning. So like it's a true cost for that income. So for instance, these are like my agents. Yes, I might earn a commission from one of the agents on my team, but then right away I have to pay them out, their split, their fee of that, or their percentage. And so that's a cost of goods sold. Or like, say for instance, you have a rebate or something like that you go out and buy something, or you got a commissionectomy, you got to go go purchase something for that person right away to close that deal. That would be a cost of goods sold. And so I have those in here as well. So like a couple of the things you'll see, Allison Edgar, that was an agent that I had. That was one of my mom's agents. And so I was tracking things for her, even though I wasn't earning any income. So that's why I don't have it in my level 2 income. My level 2 income was just basically my team. I had a little confusing when I had my mom's stuff in here just because I kept hers all separate. But for most people, you might just have one level 2 income if you're a team. If you're not a team, you won't even have level 2 income. Cost of goods sold, you'll probably just have one cost of goods sold category for anything that might come up in your business that's an immediate expense to you to be able to close a deal. So same thing as Allison. Nancy was one of my mom's agents up there with Allison, Edinger, and Nancy. Rent disbursement to owners. So this was when I had a property management business. This account is in there from there. I just need to delete it. I can go in here and I can actually just delete these pretty easily. Oh, I got a 1099. I guess I still got from earlier this year, I think I've got a rent disbursement to owner, so I can't close that out just yet. And then there you go, Stacy Handy, now uncategorized cost of goods sold. All right, so you can kind of see how all that works. Buyer cost of goods sold, that's an old category. That was before I started actually categorizing. I didn't realize there was a type that you could actually put them in as cost of goods sold, so I had them as expenses. Obviously, you don't need that anymore once you have this up here. So now we get down to my actual expense categories that I use. And again, some of these, you can switch it around, whatever's maybe applicable for you. But, I looked at a lot of different people's profit and losses in real estate to kind of come up with what I ended up using. I even came up with some of these from the Millionaire Real Estate Agent book that Gary Keller does, and shows in the back kind of how they track their profit and loss. And so if anybody wants some extra training on that, it is in the Millionaire Real Estate Agent book, I think near the back. So, but here's the categories that I have. I've got education and dues, which as you can see, then I've got sub-accounts for all those. So I've got dues, education, travel, basically traveling to go get educated. So like if I'm going to a training or a conference or something like that, I track all that kind of stuff here. I also put like my lodging and things like that inside of travel. So it's not just like my airfare, but that's also the lodging. Got marketing and lead generation as the main category. And then down below that, I've got advertising, agentology, which was a system we were using for our inside sales agents, business meals and entertainment, client parties and happy hours, closing gifts, Facebook, Google, and those are Facebook ads, Google ads, internet lead generation, so anything outside of Facebook and Google, other lead generation, which again, it's kind of a redundant category. Looking at it, I don't even know. I think I use just one of these. I think one of these I don't use. And then photography for taking pictures for my listings, print and direct mail. So those are my categories. Yours might be obviously a little bit different depending on what you're doing for your marketing and advertising. Next, below that, I've got office supplies and operations. So this was because I had the office and I still have a home office. So obviously I still do use this somewhat now. It's not as much as what I did, but this is where I have things like accounting and tax preparation. So when I pay my accountant, obviously that's where that would go. Brokerage fees. So whenever I pay my broker dues, that's where that goes. charitable contributions, whenever I give to charity or give back, any kind of like donations go in here. Insurance, so business insurance. So like when I had my office lease, we had to keep insurance for that, for our belongings inside of the office. Interest expense, so this is interest that I would pay on a credit card, goes on here. Office operations, this is like anything to do with just random things that I would need for that office. Like if I had, my internet and my telephone and things like that to operate that office, that's where that goes. Office supplies, of course, that's pretty easy. That's just anything that I need for supplies. And keep in mind, remember I told you above that I've got a separate asset category for furniture and fixtures. Well, the furniture and fixtures, like I mentioned, was anything over $500. Office supplies is just like smaller stuff, right? Like if I buy something on Amazon for $80 that I need for I don't know, a stapler or something like that, right? Put that in office supplies, and that's just an expense. It just gets expensed right away. But if it's a big purchase, new computer, an expensive printer or anything like that, you're going to have it be an asset and put it up in your furniture and fixtures, so that way you can depreciate it properly. All right, so what's up, Scott? Sorry you're late. Please start over. You got it, man, right away. I'm only 30 minutes in. What's up, Shane? Yeah, no problem, Tim. All right, so let's see, what else do we got here? So we had rent expense. Okay, yeah. So other expense, again, I try and not use those, but sometimes there's just things that I just throw them in there. I don't think I have much, but we'll see once I actually get to the P&L side of it. Rent expense, of course, that's paying for the lease. That's where that goes. State sales and franchise taxes. So having a LLC, you are going to have some taxes you have to pay. Goes into there. Payroll expenses. So these are expenses that go to any kind of salaries that you might have. If you have a virtual assistant, of course, payroll taxes, payroll processing, all that kind of stuff. So you can see here, I've got all of my team that I had on salary listed inside of here. I had my virtual assistant as well. Salaries expense, I don't think that I still use that column. I think that was before I started to itemize and have my different people on salaries. I think it used to just be lumped into one, but then I made it to where they were all individual. All right, purchases. I don't think that I actually use that column. I think that's just set up by QuickBooks. Kind of just, it's just too vague for me. Reconciliation discrepancies, again, that's just by QuickBooks. Technology expenses. So this is where I put in there any kind of tech systems or tools that I use. This is where it goes. So, if I'm using my CRM system or my, just really anything tech related that I'm using for my business, it'll go in here. My website, my email, and my hosting for my website, all that kind of stuff that I'm paying for goes here into my website, email, and hosting expense. Unapplied cash bill payment expenses, that's just, I think, QuickBooks. Depreciation expense, again, that's something that my accountant kind of helps me out with at the end of the year. I don't really touch that in my day-to-day business. Reconciliation discrepancies, one, again, that's something that QuickBooks sets up. I don't know why they have two, but just how it is. So that's all of my chart of accounts. So hopefully that all makes sense. And regardless of if you're using QuickBooks or not, you can run back through this video, and if you want to set up your books similar, then definitely go ahead. I've had mine in many different ways, and this seems to work the best for me once I want to actually create a profit and loss report, which we will get to here at the end of this call, or this end of this video. And so you can kind of see how it all looks when it's all said and done. So let me now go kind of into the banking side of this, show you. So you saw the dashboard. So QuickBooks creates a quick dashboard. Sales, because I don't use their invoicing feature, it just, I think that's really if you're like, selling stuff, or if you're in a service-based business where you're like, doing roofing or something maybe. But I've seen some people can use it for real estate, but I don't do it. I don't use invoices or anything like that. Expenses, this will go up. I just have not done the books yet for this month. I was kind of saving that till this call so I can show you how that's being done. So it shows that, gives you a little profit and loss, net income for the year to kind of show you that. gives you income, expenses, and yes, that is real. That is the life of a team leader right here, guys. So we'll show when we get into P&L, I'll kind of show you how it all rolls up. And being a team leader might not always be what you want to go after, just depending. So after you watch this video, so we'll see. And then this just got some of your bank accounts here. But all right, so first off, let's go into banking. And cool. Paying a bookkeeper is also incredibly valuable. I'm a fan. Yes, Brayson, absolutely. I did try to do that. And one thing I will say is pick a good one. We paid, I think, $1,600 for someone to keep our books, and they shredded our books. They were terrible. Like, they said they used GAAP accounting principles, and it was bad. Like, I got them back from them, and I'm not very, a bookkeeper by any means, but I could tell that the books were off. I took it to my accountant. Accountant said, no, absolutely not good. And then he was like, well, but I can get you some bookkeeping. And it was going to run, I think, $450 a month, something like that. I was like, I think I'm all right. I'll just track them myself. It really, guys, once you get used to this, it takes me probably 2 hours a month to keep up with my books. That's reconciling all my accounts. And I actually have 2 different QuickBooks accounts that I have. I've got one for my real estate business right here, and then I also have a separate QuickBooks that I use for like my rental properties and when I was doing flip homes. And so I can do both of those in a couple hours. So when you get proficient with it, you don't actually need to pay somebody, in my opinion. Most of ours, I would imagine, are pretty simple. If you've got, if you're doing $1 million in GCI or 500K or more in GCI, maybe you consider it. They get pretty advanced, I'm sure, but or maybe you just don't have the time. But I think anything under that, at least for me, it just wasn't worth that kind of an expense monthly for just a couple hours worth of work. So, but again, if you're not comfortable, for sure, there's definitely people you can go out there, but just make sure that, you have somebody else kind of looking into them, because like I said, I did not have a good experience the one time that I did use a bookkeeper. Yes, you can upload receipts to QuickBooks, Norma. Absolutely, you can. I don't, but you can. I'm probably so simple about it. I take all my receipts, I put them in a manila envelope titled the year that it is, 2018, 2017, 2016, all that kind of stuff. Just stash them away, and that's it. And I put them in there. I give him my account, but I don't even think he keeps them. He gives them back to me, and then I just keep them there in case I was to ever get audited, I guess. But that's it. So, all right. So now we're into banking. I want to show you kind of this is the actual work that you're going to do. Once you have your account set up, then the daily work that you're going to do. This is what it's going to look like. So right now I've got my 2 accounts. These are the only 2 accounts that I have for my real estate business. I try and keep it as simple as possible. I've got a checking account and I've got a credit card. I try and put everything on my credit card. That way I can get points for it and then pay it off at the end of the month. And so that's kind of what I use this for. And then my RBFCU checking, that's for anything like that's paying. I get all my commissions added to that account, and then I can pay my credit card using that account. But these are basically the only two accounts that I keep. And again, these are both separate from my personal banking accounts. So the first thing I'm going to do, because this is 13 days ago, 6 hours ago, is I'm going to hit update. And it should just take a sec. That way it'll pull all the transactions in that have taken place for this Chase credit card and for the RBFCU account. Man, that sucks if you ever change your mind. I know a great one. Oh, perfect. Hey, good to hear that, Brayson. I might have to take you up on that one day. Yeah, right now I've got it down, but for sure, maybe people on this call too might need that. So sister account, there's so you can too. Awesome. Thanks, Norma. Appreciate that. All right, perfect. So you just see that right there. I hit update. Now I've got moments ago, I've got 33 transactions that I got to classify. I've got 12 over here in RBFCU checking. I don't know that I'm going to do all of them because again, this would probably take me, I don't know, half hour or so. So I'm going to do a few of these. It doesn't take forever, but it does take up some time, more time than y'all probably want to see me do. But I'll show you kind of how this works. So first off, I'll just start with my credit card accounts. So if I go to here, starting here, Kirby Steakhouse, so that is a meal and entertainment. And I know that they do have some new tax rules now with meals and entertainment. I'm kind of letting my accountant kind of deal with that, but for now I'm still tracking it just so he can kind of see how we're going to figure that out at the end of the day. So for class, and this is, I was kind of telling you guys in the beginning that this is why I have the upgraded version of QuickBooks. I like to be able to select my class so that way I can run my profit and loss reports for different aspects of my business. So for instance, here's my different classes that I have. I've got Kyle Handy, which is if I have any kind of personal expenses that I'm kind of running through my business, but I don't know yet if I can deduct it or not, I'll put it under Kyle Handy. That way I can pull it up separately and tell my accountant about it and see if there's a way that I can use that as a deduction or not. And then I've got EXP recruiting. That's just for my EXP side of the business. If I earn any kind of mentoring income, if I earn any kind of revenue share, that's something different that most, some of y'all might not have that. Property management, I'm not doing that anymore. I used to do that back with my old brokerage, so I don't really use that class anymore. Stacy Handy, that was, again, as I had my old brokerage, I had my mom's incomes coming in, but I wanted to keep it separate from my team just because I didn't earn anything. I just zeroed that out, but I just wanted to make sure that it was separate from my books. And then I have the Handy team, which is the main class that I use for everything, as long as it's not EXP related or anything like that. So what I'll do here is I just type in the Handy team, put that in here. I've already got this as business, meals, and entertainment. I don't mess with the payee on that. I just go right there. Mangools, that is a subscription service, a tech-related service that I use for keyword research for like blogging. Tech systems and tools, that's on the EXP side. That's the ad. Now these are dues, operations. So again, save or dues. That's going to go under the Handy team. And Best Buy, $1,500. That is going to be a furniture and fixture. Original cost. There you go. Agent Legend, so that's a system that we use. Tech tools. Airbnb, so this is travel for a conference that we're going to be attending for team. So you can see how that's going here. All right, Best Buy, $19. So we're going to put 18, and we're going to put here that is just an office supply. And I mean, that wasn't more than $500, so I just put it as that. So then here we've got so this is a payment transferred from RBFCU. I know it doesn't say on here, but I know that that's going to my Chase account. And so that was a payment that got made to my Chase credit card. So I will come over here and I'll just put Chase credit card. Let's see. Yeah. Oh, I'm sorry. Here we go. I'm going to put it RBFC checking because we're inside the Chase credit card. So it's saying I received $685. I received it from my RBFC account. I just add that as a transfer. Zoom. That's Zoom calls, tech related, tech tools. Add that. Mary's Tacos, which is amazing in Bernie. If you've never been to it, it is so good. One of my clients turned me on to it. Business, Meals, and Entertainment. Let's see. What else we got? What's going on, Tammy? How are you doing? All right. So, and then we got this Epidemic Sound. That's where I get all my music from when I create my videos. Put that on the Handy team, Tech Systems and Tools. All right. So you can kind of see here. Again, I'm not going to go through all of these guys, but you just classify all these into those different categories and columns that I had showed you. And so, this would take me probably about another 15 minutes if I wanted to go through it. But the one thing I do want to show you guys is how I classify a wire transfer, like if I get a commission that comes in. So, for instance, let me take this one here, $11,305. Split that out. So what I would do here is, I can obviously put Kyle Handy income, just like that. Select the Handy team. Handy team for $11,305. just like that. And typically, I don't even know what this house was, but I put the address just like this: 123 Main Street. Save an ad. Now and I'll kind of show you too. I mean, there's a couple more things that you might do. Like, I know this number is the net number. There was actually like brokerage dues taken out of there. And I don't have those numbers in front of me right now, but what I would normally do is I would just say something like this, like brokerage fees, team, and let's just say my brokerage fees on it were $500, right? That's what I paid for that transaction. Well, then you do have to modify this, 11805. Oops. What did I do? Oh, there you go. So that's a subtraction. So, because what ends up saying is you earned 11305 to your account, which really was 11805 that you earned in commission and income, but then 500 of that was subtracted out for your brokerage dues. And if you have anything else that you would need to take out from that transaction, like say if you had a transaction manager, that basically was taken out from that net number, because like we put our transaction management on on the DA, so you might even put something like for me, say like virtual assistant, right? Say if that's my transaction manager, I would just do that, and then I would say that was $300. I'd also do negative 300, and then this means that would be 12,105. All right, so basically what that says is if you truly got 11,305 to your bank account, is what was deposited to your account, and you paid $300 to a virtual assistant or to a transaction manager, you paid $500 to your brokerage, that means that commission that you would actually earn was $12,105. And so the net amount to you is 11,305. So that's how you can kind of use this to get the transaction looking proper. Just so you see, so there's a little bit of kind of backwards math you got to do there, but pretty easy to backtrack. I'm just going to close out on that and not add that in there. But because I know that that's not the exact numbers, but you can see here. So I mean, you've got all these different ones here. You're going to want to put all of your wire transfers in. I do have some expenses that I pay out of my business checking account, including my rent expense and things that I actually have to use a check for rather than using a credit card for. So you just file those away, and then at that point, once these are all zeroed out and you've categorized these the right way, I'll show you here what the ultimate goal is. How many bank accounts can you upload to QuickBooks? Norma, I don't know. I think it's a lot. I mean, I'm pretty sure you can put more than you would need. 10, 15, 20. There's plenty of them that you can put in there. I think the real question should be, how do you get down to just having a couple accounts? Like the simpler, the better. But yeah, I mean, if you need to put a lot in there, I'm sure you can. All right, so the report that we want is this one right here. You click on reports, you click on profit and loss. All right. And of course, let's see here. Do I have? Yeah, so this is year to date. All right, perfect. So let's see here. So anyone that wanted to be a team leader before this call, be prepared to see everything here of the goods and the bads of the team leader side of the business. But let me go ahead. So I've got it year to date. And what I like to do, of course, over here when I go to customize, this is where you can filter by class just that particular, I guess I gotta move this, the class that I want, right? So like if I just wanna see the income that I made for my team, I don't want any of the other ones in there, like my EXP side, I don't care, I don't want to see that, I just wanna see my team stuff. I just filter it by the class, the handy team, okay? And then if I go over here to my rows and columns, one thing I like to do is see it by months. So I go to the columns, go to months, so that way it's gonna tell me breakdown month by month what I earned year to date, okay? And then I hit run report. All right, so then you get a report that looks kind of like this. I'm gonna move this up here so you can kind of see it. All right, so now what this does, so this is what this is all leading up to, right? So if you stuck with me on the call this long, you can now kind of see what all of the training beforehand led to. And if you need to go back and watch some of this to kind of get to this part of your business, this is where you want to get to. This is where you want to be able to see the details so you can start making good business decisions as to what's going to be, what you need to cut, what you need to keep, what you need to invest more in, what you need to invest less in. And so it literally took me 6 months, the first 6 months of the year, going back and looking where I had gone those first 6 months to make a drastic change in my business. But if I didn't do it, it was not going to be pretty good for this year. And so let me just kind of explain to you how it all works. So again, I remember in the beginning when I was telling you about the accounts, I've got my income that I've closed, the deals that I've actually closed listed in here. Under Kyle Handy Income, I've got my team's income listed under level 2 income. And so you can see here, these are all the level 2 incomes. And so basically, if I close that up here, you can just see a sum total of it. So I had earned $213,000 so far the year. The team had earned $152,000 so far through the year. And again, that's the total amount of commission. That's not what I as a team leader took, because of course I had to pay out my team. But this is the net number before that. And so sublease income, since I did sublease the office that we were in starting in August, I now have that income coming in. And uncategorized income, again, try and keep that as little as possible if it just basically doesn't fit into any of these categories. So I only have $916, which is a total of $371,000 so far for the year. So all is looking good so far. But then we get into the expenses. What's up, Brent? How you doing? Hey, Ken. How's it going? All right, so let's go ahead and go into the expenses. So first off here, let me close these just so you can kind of see. I like to close this stuff and then we can open them up so you can see them in more detail here in a little bit. But first off, so we were just here at 371 for total income. Cost of goods sold, so this is 73,000, and basically those break up into 2 different items. So I've got cost of goods sold for me, which I don't have too much of that. I think I had one kind of commissionectomy in January where I had to pay for something out of my own funds for a deal or something along those. I can't even remember what it was, but that was a cost of goods sold for me. But then level 2 cost of goods sold, this is basically me paying my team agents their splits for the commissions that they earned above. So that 152, I paid out 71,000 of that, and the rest of that is what I kept from the team. And so basically, $80,000 or so is what I earned from the team. 213,000 was my own income. And so you can see here a total gross profit, and this is before expenses, of $297,000. And that's basically if you take my income up here, so my Kyle Handy income, my level 2 income, subleasing, uncategorized, so you basically take this total income and you subtract out the total cost of goods sold, gets you this number right here, which is what your income is before expenses. And then we get down into the actual expenses. So you can kind of see here how those expenses roll up and what they become. And so what we got is, if we look here, education and dues is the first one. So far through the year, I've had $5,900 in education and dues, and it's really nicely displayed month by month. You can see if it's going up, if it's going down. Of course, most of our dues are paid quarterly, so that's why you can kind of see here why they kind of bump up here and there. Marketing and lead generation. Again, this kind of tells you what you're spending on your leads and your advertising and things like that. You can see here, a trend in my business, right? Running the team, getting a bunch of leads, paying for leads to keep deals coming to the team. And then lately, with the difference, the way that we have our team now, I've cut that. And so my expenses went way, way down there. Office supplies and operations, 77,000. It's expensive to run an office, guys. 77 grand. And I'll kind of show you the breakdowns here in a little bit. But 77 grand so far this year. Payroll, another big expense, guys. $119,000 this year in payroll. And lastly, yeah, Brent, you and me both, man. I can't wait to see it in a few years also. Like I say, this is no holding back anything, guys. I like to just be raw with you. I want you to see it, see exactly what I'm experiencing. I've got no secrets. And so I just want y'all to see everything, what it's like to be a team leader, because I don't think most people know some of the costs associated and the risk associated with running a team. But anyway, so now technology expenses, again, that's for like the CRM and other tech-related tools, $1,300 for that. So a total expense of $254,000, which leaves, after you have the 297, you subtract the 254, a total net operating income of $43,255 for the year. So guys, $213,000 in income that I bring in, that is my profit, all right, $43,000. Not the best, right? And of course, there's ways that you can do better. You can grow it. You know, there's team leaders making way, way more money, and I'm sure there was efficiencies that I can do. But it just does go to show how the risk you take being a team leader, and you know what it can end up doing. And so it's not a bad income, but it's not that, right? And so even if I would add that and had some expenses, you know, I'm sure it could have been a little bit better than this number down here. But now let me just kind of break it down and kind of show you here how it looks as well. So education and dues. So again, it rolled up. It was $5,900. You can see the breakdown below. $2,000 in dues, $2,100 in education, $1,700 in travel. Marketing and lead gen. So you can see where it all was spent there. Facebook, the majority of it all. Closing gifts, Google, client parties and happy hours, business meals, entertainment, agentology when we had that service, advertising, that's like signs, like if I buy signs, photography, other lead gen, so it's broken down there. Accounting and tax preparation, so what I pay for my taxes, brokerage fees, interest expense, office operations, office supplies, rent expense, big one right there. You can see there that kills the profit and loss right there, $27,000. That's why we subleased that out. So it does show that I'm paying it right here, just so you know, you can kind of see I'm still paying a lease, but then it's offset up here with the income. So I do have the new income now for that sublease income. And so that's kind of offset right there, but it does still show up as an expense for rent expense. Payroll, you can kind of see all in there. Different salaries. I do pay myself a salary, as I mentioned. And so basically, you know, the way I look at it is I pay myself a $4,000 a month salary. You do as a, you know, having an S corporation, the way I understand it from my accountant. And again, I'm not an accountant, so you know, go get actual advice from there, but from your accountant. But he just says you have to pay yourself a reasonable salary. I guess in real estate, he assumes that $48K a year is a reasonable salary. And so that's what I pay myself. That's how I understand it. And so really, you know, one way you can look at it is I've now paid myself for, I don't know, what's that, 9 months of the year times 4,000, that's 36K. So 119 minus 36, that 36 was my own. So if you want to look at it like this, I've earned 36,000 of W-2 income, plus then I potentially have $43,000 of profits. And that's really what my takeaway is of the business. Technology expenses, so you can see in here, breakdown there, most of that is tech systems. I do have just a little bit coming in for website hosting, email, stuff like that, but that's it. And so that's really, you know, how you can kind of see it. But, you know, bottom line, you know, when you look at this, and like when I kind of looked at this 6 months through the year, and I realized, let me kind of minimize some of these so it makes it easier to see it all. So I had realized, I think 6 months through the year was June. And so I was at like something like $170,000, $180,000 of income that I had earned. Maybe actually no less than that, 150. I don't even know if you take these incomes out and subtract that out. That's what it was at basically. 57. You take that, and then when I looked at it at that time, because you can see here down at the very bottom, net operating income for those months. It's the team leader. It's a roller coaster ride, guys. I'm telling you, you know, you have great months and you have terrible months. And so if you don't have the stomach for it, you know, you gotta be willing to take the good with the bad. Well, I think 6 months through the year, I was basically broke even. You know, I was $0 profit. You know, this number over here would have said $0 at that point. And so all that I had to show on my, you know, 150,000 or 60,000 in income was basically just the 24,000 that I had paid myself as a salary, 4,000 times 6 months. And so for all the risk that you take, you know, I just had to take a step back and really look at, you know, what's the best use of my time and my efforts. And at that time, it was just to kind of restructure the way that I had my team. And so I did that. So now you can kind of see my expenses that were averaging about $30,000 a month, 6 months through the year. I've significantly decreased it. And I think even last month it was 15,000, which still included my salaries. And so my big goal was to take my $30,000 a month salaries, there's $30,000 a month in expenses, and drop that down to $10,000 a month, which still includes my 4,000. So really it's like, $6,000 is what I need to run my business on. And at that point, if I can run my business on, $6,000 a month, that's $72,000 a year, and I can earn, I'm already earned 213 this year, I'll be much more profitable, come next year. And so, it was one of those things I had to see the numbers, because, when you're not really into these numbers day in and day out, and you're just seeing money coming in, like, man, I had $152,000, that came and passed through my bank account from deals that my agents were closing. I had $371,000 in total income that had came through my account. You think you're doing good. You don't really know. And so it really kind of was eye-opening to really see, when you factor in all the expenses, the cost of goods sold, realistically what, where you're at. And so I definitely think that, this is how you need to run your business, even if it's not this complex. Just have something where you can track your incomes versus your expenses, and then, really go from there. There's, I do print out, you can create a balance sheet as well, which I do give to my accountant. I don't really use it for much at this point. I don't even really know how to use it, but profit and loss is truly the biggest thing that I use for my business. The other cool thing is, if you do have employees, like QuickBooks, using QuickBooks, you can actually, pay all of your taxes and stuff automatically. QuickBooks figures out how much is owed depending on their salaries, and it files the taxes for you. And so they make it super, super simple. So that's why, again, if you have employees or something like that, I know there's services that you can pay, like ADP, but they're very expensive. And so, I think they're like $30, $40 a month per employee. And so I think they're like $2 a month per employee on QuickBooks. So it's much cheaper if you can just go through here, and it does it for you. They have a little setup every time you get a new employee. Like if you go in here, you can see your workers. You can add a new one, active employees. You can run payroll through here. So they make it super, super simple to do that. And again, that's a little outside. I'm not going to go into the scope of running payroll, because I don't know that most of the agents watching this probably have that part yet. But if you do need more help on that, let me know. It's pretty easy to set it up, and then basically all you do is like three clicks of the button. Once you get it set up, you just click, 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 go right through running payroll, paying taxes. It makes it super, super simple. So if anybody's interested in signing up, I did see, I guess I got a refer a friend thing on here. I didn't even know about this until I was going through my settings. But if you wanted to, I've got an invite code, and I guess I'll put it here in the comments just to see if you do want to sign up for it. I do get like a little bonus. It says here 50%. You get a 50%. You get 50% off your subscription, which is pretty awesome. And then I get we'll both get a $50 Visa gift card when you subscribe. So pretty cool. So if you're going to sign up after watching this, definitely try and use that link. Help me out and help yourself out. But that's about it. If any guys have any questions, send me a message. Happy to help. But again, just really get on this, guys. It's a game changer for your business. It does have a little learning curve. It does take a little bit extra time out of your day or your month or whatever, but it's 100% worth it. I will promise you that. When you're running your business off of the numbers, it will completely change the way that you look at expenses. It will completely change the way you look at your business. So I hope that helps everybody. Look forward to connecting with you guys all. It's been an hour, so I wanted to kind of get this thing stopped at 8 o'clock. But if you guys have any questions at all, like I say, feel free to message me, and I'd be happy to help you guys that way. So everyone have a great night. It's 8 o'clock. Go spend some time with your family or get to bed. I know that's where I'm heading here in a little bit. So y'all take care. All right, bye-bye.